There's no doubt in my mind that we're in the final stages of the everything bubble, the multi-year bull market, the macro 18-year cycle. We're seeing very clear evidence of this with commodities ripping new all-time high prices, Bitcoin new all-time high prices. Yes, even after that massive liquidation we saw on Friday, the stock market's new all-time high prices. So what comes next? Plenty to look at in today's video. I'm going to start with invalidation signals for Bitcoin, end of the bull market for BTC, start of new bull markets, and altcoins, along with the S&P 500 and what's happening in the economy. So hit the like button, subscribe to the channel if you're new here. I cover all of these markets on a daily basis because that's what I do full time with the Investor Accelerator. More on that later, but today let's start out with the invalidation signal. We're at 2 days now, green arrows, which could invalidate this signal right here. Typically, if you see this signal, red, 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 don't worry about the grays, that can mean that the market is going to go into a prolonged drawdown. Now, we've seen it multiple times before. You guys have been following for some time, know what I'm going to say next, looking at December, which went through a 30% drawdown. March 2024 went through another 30% drawdown, plus many other examples through previous bull markets where you get these big bearish signals from all-time high prices. Now we're watching to see if this signal will be invalidated if we get another green day up from here. And typically we wouldn't see this as a strong invalidation signal from any particular low, but I'm using the Friday bar because it was quite a significant day. The biggest liquidations that we have seen in history for Bitcoin. You can see it here. There was nearly $20 billion of liquidations. Therefore, that has to be respected as a pretty significant day in the markets, wiping out a ton of liquidations. So if we do get the bounce back and a few days up, the green, 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 higher highs, higher lows, that could be a very good signal that we're going to see an invalidation to the downside. A couple other things that could also invalidate the markets, which are playing out right now, multiple closes above the 50% level, and that is basically the halfway point between the top and the low. And provided the market gets above that point, it's like saying that the bulls are back in control, at least for that time period that we are watching. And we're looking at this on the daily chart here. Now, there were many different prices for that Friday collapse, the big reset. Binance, the largest liquidity exchange in the world with the most volume, had a price of 102,000 when you look at Bitcoin versus Tether. Coinbase had a different price, $107,000. So it hasn't met the 50% level here at 116,700, the number that we've been tracking, but it is above the 112, and the majority of the other exchanges are all above this level here. So it's above their 50%. In the case of Binance, 114,000. In the case of Bitstamp, it is not because it didn't have as much liquidations on that day. But then when we use a combination or the indexes like Bitcoin versus US dollar on the index where it combines all of the data, it's getting very, very close to it here, testing that level a couple of times, 115,000 on this chart, and on Kraken, another large crypto exchange mostly used in the US and Europe. You can see that it has closed now a couple of days above the 113,000 from this chart. So watching all those combinations suggests that it is in a stronger position or will be in a stronger position, even if we do get some pullbacks here after these 2 days up. So I think that's still pretty positive signs overall for Bitcoin for this bull market after those mega liquidations that happened on Friday. Now, in terms of the time frames for the bull market, we're into the 150th week, 1,050 days from the low to the high. This bull market is getting on. It is pretty much right on par with the last two. And for the first one, the Genesis cycle, 2010 to the peak of 2013, it's about 13 weeks away from that exact top. Now, I'm not trying to use exact numbers. We're just using it as a guide, essentially like a roadmap towards the end of the cycle, and to have a look at some time frames. So we take a measure from the current week, well, at least the all-time high, because that's where we get this price from, low to high, and that's the highest point so far, 126,000, and go out 13 weeks. You can see the date there right next to my head at the bottom. It gives us a date of the first week of January. And I've said many times before, I am watching anywhere up to the first 2 weeks of January. Maybe it slips over a day here or there. I don't think that's anything to worry about, especially over a 3-year period. There's got to be some give and take either side. We're not looking for exact dates here. And so far, we've seen most of the signs to suggest that things aren't going to be that different from prior cycles. So essentially a bit of rhyming to previous cycles. Therefore, I don't have any belief that we're going to see these extended cycles that you're seeing a lot with these headlines. And I suspect they might become even more prevalent as we get closer towards the peak. Bitcoin cycle peak may extend into 2026. I mean, I'm saying the first 2 weeks of 2026, but there's 12 months in a year. So it could be that these people are looking towards April, May, maybe even the second half of 2026. Like this report is suggesting, it's looking somewhere out into the late part of the first half of the year of 2026. I think that might be getting a bit far. And if that is the case, then I think it would be something potentially building like a left translated cycle, which to many would look like an extended cycle. But if you get that timing wrong, that would set you up for a massive, massive failure. Because how that would work is you would see the price for Bitcoin rise, like you can see here with this red line. Forget this on the side, it's just a rough roadmap. And then you would see the decline. Maybe the decline comes somewhere into here, and you get this higher price coming into May as an example. And then you get the decline, and then you start this next leg up into a left translated cycle. And then you get a multi-year bear market for Bitcoin. So there's any number of scenarios that could happen next year. Of course, I don't have the crystal ball. We've got to see what the market is going to do leading into that period. But nonetheless, the headlines, in my opinion, would start to get people, investors, even hedge funds, smart money, get them offside because they haven't been around these markets for all these years. And they would think that there is the possibility that, wow, things are different this time. We're going to see an extended cycle, especially when we look at something like the 18-year cycle. Getting into the final stages, into the peaks, is where you really do start to see a lot of volatility and a lot of emphasis on how much longer the bull market can keep going. So we are here, we're at this peak right now for the 18-year US real estate and economic cycle. And then the next move is basically a long drawn out downtrend. Now, in terms of the economy, I have some more data on that coming up in a sec, especially the GDP and how this is measured and how this can look like things are better than what they are. However, I do want to quickly look at Bitcoin and cover off the Bitcoin data here. The month of October, guess what? It's back in the green after 13 days. We're getting close to halfway through the month after a massive, of course, nearly 20 grand from the high, 12% on the day, 15% from the all-time high to that current low, give or take, depending on the exchange. And now we see green at the moment for the month of October. I don't know if many would have expected that on Friday afternoon, Saturday morning, to think that things could have bounced back so quickly. We are into one of the best months for Bitcoin, but not so for the S&P 500. October is not the greatest month for the S&P. Quarterly for Bitcoin, this is one of the best quarters, 69%, second only to quarter two. And then you basically have a coin flip for quarter one and quarter three. So January can still be an all-time high, can still hit a higher price, but the rest of that quarter could be heading down. We know that there have been some pretty significant lows around the period of March and April. Now, the cycles, the predictive cycles that we're using here at TIA, you can find a link to this in video description down below. It is going to come under the TIA indicator suite. That's where you'll find all of these charts that I'm using here. This one is looking at a composite of Bitcoin for the 2 years, 2020 and 2025. Now, you can put any of these cycles together, provided you know what you are looking for. And the reason I'm using these two are that it is rules set by Gann. So the legendary trader from over 100 years ago suggests to look at 5, 10 years, 20 years, 30 years, 40 years. But of course, we don't have that much data for Bitcoin. Therefore, 5 and 10 years. And they so happen to be very similar to what's going on this year. So in advance, we've been following this. And the next stage, maybe a couple more days of a bit of a grind, and then a bit of and then we get that stronger move in October. You guys may have seen this before. November, December, still grinds, but overall up. So it might not be that super simple of like straight up and it's the end of the game, but there could be some drawdowns through the period. Now, if we do another feature here where you can drag the lines over and line up the lows to the lows, something that Gann also talked about, you can see just how much closer it gets to the action here, where you're getting these lows that are matching up even closer to the dates. Now, I don't want to curve fit things too much and just make it nice and simple, which is why I keep it to the starting point to be the same. But there is the point of using this is to get an idea of how the pattern will form in the market. And so far, things have looked pretty good. Almost to a day, we got a pullback on the red line. So that's the composite combining the 2 years. So basically like an average price, looking at the highs and the lows, the percentage of the move higher and the move lower. There was a drawdown there over the last couple of days, and we saw a massive drawdown for Bitcoin, but there was nonetheless, we're looking at the pattern here, and there was still that drawdown. Now we're starting to get the move up, and you can see how the lines are coming together. They're both starting to move up. So there might be a bit of a stall here in the next day or so, and then a bit of a stronger move higher again. Let's see what happens. So far, it's been pretty good. And I think it's just another cool feature that we can use to see whether we can get even closer to the market using the cycles. Now, if that's something you're interested in and you want to take your investing more seriously with a community of like-minded investors and traders covering all asset classes, we're not stuck on altcoins or Bitcoin. We're looking at real estate, precious metals, the stock markets, and of course, Bitcoin and altcoins. TIA Premium, we will be capping this as the cycle progresses into this peak. Things can get a little crazy in the downtime, and we want to be able to focus our energy with our members and our portfolios. Link to that is in the video description under TIA Premium. TIA, check it out at TIA Investor. Okay, let's carry on with the stock markets. After that mega day down, 3.3%. Monday came in, nice gap up on the open, a close higher, and then Tuesday has now begun. We don't have the pit session yet, but we have seen another day higher. So we can see that the price action has jumped back into where it was prior. So you can see it's back into this trading range again. And looking at the 5-year cycle for the S&P 500, it had a jump up. That was due probably the next day or so, but it seems like we've had that sooner for today. Remember, these are 5-year cycles. We're just trying to get a pattern here of the market action. Jumped up from the low, it's what we're expecting, and then basically a grind before another jump. Again, let's see if we get something pretty similar to what's happened in the past, because so far it hasn't failed us here for the S&P 500, and therefore I think we probably still have further to go in the cycle based on what we're seeing in the price ranges, the corrections. We haven't seen any breakdowns of the macro structure, even though we had this huge day down. It doesn't mean that the macro structure is broken yet. For something like that, we would need to see closes back below the previous old all-time highs. And even on the tariff collapse, the price did not close underneath the old all-time highs. Now, it was a huge drawdown, huge scares. I'm not saying I was perfect with anything in this market, but when we just take a step back and look at the rules, 50% levels, support and resistance levels, where do those closes come in? It didn't break underneath, it didn't close underneath those highs. Of course, we can see wicks, but it didn't close underneath those highs. Therefore, the market was still on. Hard to believe at the time as well. I agree. Now, the NASDAQ also looking in a similar position. We had the pullbacks, and now it's watching, or it's following that 5-year pattern to the upside. So still, in my opinion, further to go with the upside, which means I still think there is further to go for Bitcoin. I think there's still more to go with some altcoins, as I'll get to in just a sec. And the sentiment has also reset for the S&P 500, which is a good thing. We definitely need to see some of that sentiment reset. It was touching greed back in July, and it's since sort of dropped off, even though it was hitting new all-time high prices. And now we finally have that nice big sentiment reset in fear. Things can go a little lower from here. We could see even greater fear, maybe even extreme fear. But you'd think after a day like we had on Friday, and now Trump pull back the tariff scares that he was talking about, we may at least grind around here until the market can figure out what it wants to do next. Now, in regards to the tariffs and what's happening in the economy, this all relates back to our 18-year cycle and Another reason why I think we are potentially at this peak now, so maybe this yellow dot could go a little higher here and eventually will start to roll over in the next 6 to 12 months, are things like the GDP. And it really started to make sense when I watched a video here, how money works, just looking at the imports and tariffs and how this all comes together to give us the print for the GDP. So in Q1, businesses bought everything they needed to buy to front run the tariffs and hopefully have more profits in the bank for when these tariffs did come out. So they had enough inventory, they could keep selling their goods at the same price without having to put it up. Next quarter comes through, they don't need to buy all those goods anymore because they have all the goods already. And therefore the imports went down a lot, which makes the GDP look even higher. So that's how they do the readings for the GDP. So Trump's out there on his social, whatever his thing is called, Truth Social and X and so on, saying how good the GDP is. GDP's up. But when you take a look at how the numbers are recorded, it doesn't necessarily mean that the GDP is great. It just means that everyone bought what they needed to for the coming quarter, and potentially we'll start to see the real effects of the GDP in Q3, Q4, Q1 in the very near future. Now, most people would be measuring a recession based on 2 negative quarters in a row, but that's not how the US measures it. They've changed the rules. That's fine. We've got to run with what they have. But we could start to see some of that weakness even come through in the GDP numbers, or if we look at the import numbers in the coming months ahead, which is another reason for this cycle to begin turning over. However, it may not come through as soon as the readings are out. We have to wait for the next quarter and then the following quarter to see how much they actually buy in regards to the imports, because they may still have enough stock to get them through another quarter. So a really great video. I highly suggest having a look at that if you have an interest in economics and how these numbers are put together. Now, I think the market understands this, or at least the smart money understands this, and they've basically been looking elsewhere to be putting their money. In some cases, silver, of course, other cases, gold, new all-time highs for gold, $4,160. As I'm recording this, it's still heading higher, even though the pit session hasn't even opened yet. That just means 9 a.m. to 4 p.m. New York time. Every other time is just a 24/5 market, so 24 hours a day, 5 days a week, and it's just traded on lighter volume. That's essentially what's happening right now. And as I showed before, silver now boomed on Monday, 6.86%, call it 7%, up to $51 an ounce, and now at $51.60, climbing as I'm filming this video, again, at a time when the market isn't even open. It's open 24 hours, but the main volume doesn't come in until 9 a.m. New York time, and at the moment, climbing and climbing. So you can see that they're starting to put money elsewhere, even though some of these metals don't even do anything. Of course, like gold doesn't do anything. There's no return on it. You just see capital growth. We're getting that capital growth and it is hitting new all-time highs. Therefore, you don't buck the trend just because it doesn't do anything. People still want it. Therefore, price goes up. And we haven't seen a breakdown of the daily swing low, which is a very strong sign, since September 18th, where it only marginally took out the previous day low. So this is a very, very bullish sign for the markets, especially if you've learned how to trade these markets using the swing chart. You can see with gold here, it was so fractional, just $2, 0.06%. And you have to go all the way back to August. So 2 months now on a daily swing chart, this thing has essentially been up all but one very, very minor touch at the low, and then it's continued higher as well. Now that is obviously part of what I'm calling the everything bubble. Gold in the yellow is up, Bitcoin up, green is the S&P 500, and as one of the other signs we've looked at, the home builders is not up. So real estate may be on the verge of essentially rolling over, but that takes time, and the home builders ETF is one of those potentially front-running signals that has put in a lower high here. You can see in the white, whereas everything else has been running up. Speaking of running up, Bitcoin and cryptos have been running up. More importantly, Bitcoin, or more notably Bitcoin on the Google Trends, so crypto in blue, Bitcoin in red, all still positive signs for a higher leg here, I think, for Bitcoin. As you can see, the interest has continued to climb. That's on the 12 months. In terms of the 90 days, it has climbed and has since pulled back the last couple of days. Of course, that move there was from the liquidation event. We haven't got back to where it was in August, so it really hasn't climbed that far. And for the last 5 years, it's also started to tick up as well. So when you look at these averages over the 5-year period, we got the lows in on time, like we were talking about. Looking at the same sort of low point that it had put in many, many times before. So we saw the support and then we got the bounce. For whatever reason, human nature came back at those times to search Bitcoin and crypto, and we saw the search volume bounce from that point. Daily exchange volume continues to climb higher. Good signs here that we are getting further or closer to the breakouts, further in the bull market. A invalidation or a worrying sign would be if you saw this daily exchange volume roll over and break the lows here at $46 billion. Liquidations, as we looked at earlier in the video, still up there, 400 million, but the long and the short ratio is getting closer to balanced here. So it's about 1.5% difference. Long, 49.25, short, 50.75. So the market is still a little bit heavier on the short side, but nothing extreme like we've seen previously with a differential of around 3, sometimes even 4%. So things are still looking a little more balanced after that big shakeout. Bitcoin and crypto on their market sentiment, we saw the extreme fear and now climb out into fear, so still looking good. And the big one here is that they came together. We saw the crypto fear and greed index, the original, the beautiful one here, that saw extreme fear on the 12th. And then we also had recently on the 14th, I think 13th and 14th here, for FOMO Finder, hit panic. So when these two charts come together, these two sentiment indicators come together, it generally gives us a pretty high chance that a low is in, or very, very close to it in terms of price. Like we've seen in the past, we saw a couple of these lows form around July 2024. August had a lower low in price, but it wasn't long-lived. And you can see that there was a support level drawn in somewhere around sort of 52, 53, 54K, even though August spiked lower, then closed higher. So you had the extreme fear here in July. You had the panic and panic again, and then the market started to climb out of those areas. You can see the divergence begin to happen there. So panic started to climb. Maybe we're on par with that now. Lows, fear, panic, now extreme fear, panic, and we had that slightly lower low than the previous ones we saw in late September. So all good signs there. Bitcoin ETF flows, huge ETF flows again at the top. There's ETF flows, so people buying up really hard at the top. And maybe over the next couple of days, we'll start to see the sell-off show up here for the ETF flows where they were selling out somewhere around the lows. It happened on a Friday afternoon, so a little hard to say, and then has since bounced back. So maybe it's not going to be as severe as prior lows. But we'll keep watching the ETF signal as a contrarian signal that we've shown for many, many times here on the channel. Right where you get to the tops, lots and lots of buying takes place. Right when you get to lows or near the low price, you get lots and lots of selling take place. Just as clear examples that you can see, you can quickly spot on the charts. Ethereum did the same thing here with their ETFs around the tops. Remember, ETH topped here around August and since pulled back. Huge, huge buying, the biggest buying that ETH had ever seen. And then, of course, the market pulled back from there with big, big outflows as well. Bitcoin dominance has continued to fall, and that has been taken back by Ethereum. Ethereum continuing to rise here. I'm going to do another video on Ethereum and Bitcoin price predictions just to update that as we now potentially have a solid low here for ETH. And speaking of those lows and those time frames, I've mentioned that I think we're sort of towards the end of this now. I don't think we're going to get an extended cycle, and the time frames towards the end, somewhere between a couple of weeks to a few months. Ethereum has had 47 days down from the top. If this is in fact the low, there are many signs to suggest that it is a low. And prior, these large moves were 150, 150, 180. There was very, very a strong confluence between a lot of these time frames for ETH. Look at the moves up, 152, 133, 158, 137. So very, very similar repeating patterns. Now, if we got the 47, look what we had last time. We had a 50-day move down and then only a 26-day move up. We had a 57-day move up to the prior cycle top and all-time high. You had a 45-day bounce, 18-day correction, 50-day bounce from that point into that final top. So as we get closer to the end, generally these days start to contract a little here. I'm not saying it has to happen like that, but it's happened before and it happens many times. So I'm definitely paying attention to that. I'm going to be watching somewhere around 26 to 50 days. So 26, basically call it 4 weeks, and 50 is roughly 7. So sort of that 4 to 7, so 1 to 2 months from this point for nice round numbers. That'll take you into November, potentially into that December period for ETH. And if Bitcoin tops somewhere around there, generally we see ETH go just that little bit further. So I'm going to keep watching these dates into this final move. And ETH USD also looks like it's in a good position now, closing above 50%, $4,200. So it's confirmed that for at least one day that we're above the 50% level, 2 days up from that low as well. Let's see if we can get a third day to crack the top. And ETH BTC also had a rally here, getting closer to that 50% level. We need another move higher. I think for this cycle, we've still got a bit of room to move here to get to roughly 5 to 5.5% of Bitcoin's price, which could set it up for some nice moves higher than $5,000. As I said, I'll do an update video on that, so make sure you've subscribed to the channel. Solana also climbing here, good position. It has done 1, 2, 3 days up now. So we had the big liquidation, 1, 2, 3, we got it. Provided this doesn't collapse below 190, then we have 3 days up on Solana. It's not the most significant low for Sol as it was for some of the other charts, but it's still an important turning point, I think, to get the 3 days up. And a close above 213 is going to set this up for a much stronger move higher once we start to see the rest of the markets go. And no video is complete without looking at USDT dominance. Down, down. We haven't got there yet, but it's sat on the 4.6%. So I do want to see some closes underneath this level for a renewed confidence of more liquidity into cryptocurrencies. Nearly there. Hit the like and subscribe if you want to join us with TIA Premium before we cap it out. Link in the video description. Otherwise, check out the free reports. There is one coming out today, Tuesday, Wednesday, and Thursday. See you guys real soon. Until then, take care and peace out.